Right now, I have a gal that's, she's got a couple $1,000s saved up, some money in her 401k, and she's going to be able to buy a house for $1,500 out of pocket.
Because of MSHDA.
Because of MSHDA.
So today we're going to talk about MSHDA. That program is here in Michigan. It exists for the exact reason that home buying is expensive these days. A lot of people don't even know it exists. We are here in Howell, Michigan at KNE Realty. I'm the digital marketing manager. I'm here with Greg Goddard, senior mortgage officer, consultant, all of the above.
Yeah.
And Joel A. Snyder.
There you go.
An agent here. So Greg, MSHDA, just give me a general overview of what it is and how it works.
Perfect. Yeah. Like you specified, it's a state program. They have a couple different loan products. Right now, there's only one that's in effect, and it's the home loan. So it's somebody that's buying a house. You don't have to be a first-time home buyer to use MSHDA, common misconception. But it's $10,000, and it's a piggyback to your traditional FHA, conventional, or USDA loan. So there's basically two ways that you can use the loan. You can use it with no down payment assistance and get a low interest rate through the state. And they have grant money that's allowing them to do this. The second and more commonly used MSHDA product is their $10,000 no interest loan that you don't have to pay back until you sell the house. So again, it's a piggyback. So you're doing an FHA loan, which has a 3.5% down payment requirement, and then you have your traditional closing costs on top of that. But then they're giving you $10,000 that gets to offset your down payment and closing costs. Conventional has a 3% down. You can do more than the minimum down. You don't have to do the minimum. And then USDA's 0 down. VA, you can use MSHDA with VA, but they only do it with the no down payment money. You can only use it for that interest rate reduction. So it's a good product. There's nuances. There's obviously, I call it hoops, that you have to jump through. So depending on where you're buying the house, there's income limits. So it's household income. Anybody over the age of 18 that's going to be moving into the new house has to go into that income calculation, and it's projected income. So they're doing basically how much could you make, even if that's not truly how much your qualifying income looks like. So people get frustrated because I tell them, well, we can't use all of that income. Maybe they have a second job that we can't use to qualify them, but MSHDA is going to qualify that second income as household income.
Okay.
You have a child that's 18 that's still living at home and is not a full-time student. Their income has to go into the consideration, or we have to be able to showcase that they're moving out. So these are things, I've done MSHDA. I've been doing loans for 10 years. I've done a lot of MSHDA loans each year. Our team has been showcased on MSHDA's, end of the year for how many MSHDA loans we do. So there's certainly still things that unfortunately pop up because MSHDA, again, is underwriting this loan, and they have little nuances that is their interpretation of their guidelines that we might not agree with, but they're the ones with that $10,000 that get to make that determination. The common qualifications, you have to have a 640 credit score. So they did make a change that we don't have to have everybody over the age of 18 on the loan. We just have to consider their income into that income calculation. But if we need to take someone out of the equation because of their credit score, we can do that. So their income is now not helping, again, from a qualifying standpoint, but just as do they qualify for the MSHDA in the income limit perspective.
Okay. And the income limits they're also location based.
Correct. Yep.
So different levels of income in different areas.
And then you have 1 to 2 household, and then 3, 4+ household. Okay. So you have 2 income limits per household, right? So they're done by county, and then some counties have subset selective cities within that allow for a higher. So like Wayne, Oakland, Macomb counties have specific cities that they'll allow for a higher income, but the county limits change every single year, and it's just a percentage based on the area median income. So just like all the lending that we do, it's based on that, and they do increase. MSHDA only allows for a purchase price of $224,500, which has been consistent since I've been doing this. They haven't adjusted that, unfortunately, and they might look at what home values have done, and they may increase that at any point, just like they can control any of this. But each year, annually, they come out with those new income limits. One of the biggest changes that they've changed over the last few years is they used to have an asset limitation. So when I first started doing the loan, you had to have less than $10,000. So we validated assets, and if you had more than $10,000 in liquid assets, meaning your checking savings account money that you have on hand, you didn't qualify. So you had someone that got a paycheck and now they have $11,000 when they had $9,500 when we pre-approved them. They don't qualify.
So you can qualify for $10,000 unless you have $10,000.
Correct. So you had to have less than $10,000 in order for us to be able to loan you the money. And then they increased that to $20,000, which gave us a lot more wiggle room. And then I think last year they got rid of it altogether. So there's no more asset restriction. You can have $50,000 and want to do 20% down and still use MSHDA.
Interesting.
There's pros and cons that I could go into with the client and talk about what I deem as, is this a good idea or not? And ultimately, I've had clients that do 20% down and they still utilize MSHDA because they want that extra $10,000 to keep that payment cheaper. And, it's just one of those things where they get to make that determination, right? But that's one of the biggest changes that I've seen over the years in the MSHDA was that asset restriction.
That does seem like a big change because it sounds like the whole thing was designed for people that obviously couldn't, enabling something that you physically wouldn't be able to do before I get into a house with that. Because closing costs, I think, are overlooked a lot. People don't realize how much you have to save up before you go to actually buy a house.
If I understood you there, Greg, you were very specific about what these funds can be used for. It can be used for down payment or for buying down your interest rate.
And closing costs.
It can be closing costs.
Absolutely.
That was my question for you. Okay.
So it's any, it goes towards any of that. And there is no buying down your interest rate on MSHDA because MSHDA's interest rate is controlled by the state. So there is no, you go to this bank versus that bank or shop around. MSHDA's interest rate is MSHDA's interest rate. MSHDA's closing costs are MSHDA's closing costs. It's controlled by the state of Michigan, and it's not bank to bank. You go to us versus another bank that might charge a higher origination. Our origination is set. It's 1%. So you're paying 1% for origination for a MSHDA loan, which could be higher than your traditional origination on a different loan product just because of the purchase price. So, these are the pros and cons. These are the things that we weigh when we're talking about the opportunity. Sometimes with MSHDA, we get a client that doesn't have other options. They don't have the down payment, let alone the closing costs. And this is an opportunity for them. Someone that might only have, right now I have a gal that's, she's got a couple $1,000s saved up. She's got some money in her 401k, which we would look at and consider as reserves. And she's going to be able to buy a house for $1,500.
Nice.
Out of pocket.
Okay.
So
because of MSHDA.
Because of MSHDA, and it's something that she was, it was life-changing for her, which is a good opportunity. It's that's a feel-good conversation for me. That's why I love this program, and that's why I like helping those, the people that don't think that they have any opportunity to buy a house, and then we can set them up and say, hey, you're doing all the right things. And this isn't a loan product for everybody.
Right.
I get people that have $500 saved up and they don't have great credit. They don't have the credit requirement. They might have the income to support it. But the reason that some people can qualify with such a low amount of money out of pocket is they do have the reserves. Maybe it's in a 401k where they have that emergency fund. Right. I don't ever want to see, and this is just lending me as a person lending money to people. I don't want someone to buy a house, this investment, and then something breaks.
Yeah.
As a homeowner, stuff breaks in my house all the time, and the last thing I would want is them to not have a solution for that break, and now their investment is in a compromised position.
Did I either heard this or I read it somewhere that you have to stay in the home for 5 years?
You do not.
You do not.
Nope. So they've had programs in the past. They've had, again, this is currently the only program that MSHDA offers, but they've had additional programs that they've offered where the money would be forgiven. So this is another common misconception is people say, well, if I stay in the house for 5 years, that $10,000 is forgiven. Yeah, that $10,000 is a lien on the property for as long as you own the property. So if you sell, if you refinance, if they deem that you moved out of the property and are no longer using it as your primary, like they could tell you that $10,000 needs to be repaid. So there's you do not have a limitation, just like you don't when you buy a primary residence. Your intentions are to live in it for a year. So with you buying a house with MSHDA money, if you're putting truly down the minimum and you're getting that $10,000, you're basically underwater.
You're in a negative equity position.
So if I buy a $100,000 house with 3.5% down, and I borrow and I borrow $10,000 on top of that, I'm $6,500 underwater right from the get-go.
Yeah.
So a lot of times, unfortunately, I have the conversation with people a year or two down the road, and they don't have the ability to sell their house because they don't have the equity position. So it does make sense for someone that doesn't truly plan to stay in a house for 5 years. They probably shouldn't use that loan program because they might be in a position where they're stuck.
Yeah, because it is, like you said, so it is not forgiven in any circumstance.
No.
So this is a basically secondary loan. It's secondary borrowed money.
Yep.
And you mentioned it's piggybacked. It's a piggyback loan.
Correct.
Right? So you cannot have standalone MSHDA assistance.
Correct.
It is, you qualify for something like FHA or conventional or whatever
Correct.
other loan first.
Correct.
And once you're through that gate, then this opens up.
Yes, and there's overlays. MSHDA has their overlays on top of your like FHA. You don't have to have a 640 credit score, but for an FHA MSHDA loan, their minimum standard requirement is 640. And I guess to back it up 1 second, the MSHDA will allow that $10,000 to potentially be forgiven in special circumstances, is what their language is. So I think maybe like death, bankruptcy, like things that may be explained in a position where MSHDA says we'll forgive that. But I just had this conversation because I had an agent that was trying to sell a house, and the seller did not disclose that they had MSHDA funds that were a lien on the property, which is a big problem when the seller's doing their numbers and showcasing, hey, we can sell your house, we can get you out of this house, and then when you add $10,000 of loan to be paid off, maybe there's now not enough equity for the seller to walk away with money and be able to pay an agent to do their job and to pay the closing fees as a seller. So it became an issue, and I said, well, you know what, there's been conversation in the past, let me reach out to MSHDA. I reached out to an underwriter, and she said essentially it exists, but it's very special circumstance. It's not something that we're just gonna, hey, you don't want to live in that house anymore, we'll just forgive it.
So they do reserve the possibility,
Correct.
but it's extremely case by case.
100%.
Like, okay.
Yeah, and I'm hesitant. I like to be an optimist, right? But I also like to be a realist, and that's where I think that
Don't expect it.
Correct.
Yeah.
Correct.
Makes sense.
Yeah.
So if you have a VA loan, then is MSHDA still on the table?
So from my understanding, and again, this could be a cross-country mortgage thing, but we can only do an interest rate reduction. So basically, they'll allow us to use the MSHDA loan with the lower interest rate, but they won't allow us to lend the $10,000 on top of.
Oh.
So we can do it with a USDA loan, but unfortunately for VA, we only are able to do the interest rate reduction.
Interesting.
Yep, and again, each MSHDA, VA, USDA, FHA, and conventional, you can do. Then you don't use the down payment assistance; you just get the interest rate reduction.
Okay.
So they'll give you. I think right now the interest rate is at 5.75 if you were to do no down payment assistance, and it's at 6.375 if you use the down payment assistance.
Okay.
So 0.5% higher, but
Makes a big difference.
They're both still very competitive with their rates, but one's uber competitive because they're not giving you the $10,000 on top of that.
So if you qualified for both the interest rate reduction and the $10,000, hypothetically,
Could use
you
either.
just choose?
Correct.
You pick and choose. Okay.
Yeah. So if you had the money to do the down payment and the closing costs, you didn't need $10,000, but you still were underneath the 224.5. You fell into the credit score requirement, the income limit requirement, the debt to income ratio requirement. Yeah, it's now an opportunity for sure. Now, are there other alternative programs that we might be able to do as grant money, meaning we can give you free money that you don't have to repay like a MSHDA loan? Yes. So sometimes buyers will then say, well, I'll take free money over borrowed money. And I've had borrowers right now that have that. They have both on the table. Do I want these grant incentives that I can get, and maybe it's only $3,000 or $4,000 versus MSHDA's $10,000. They have to figure out, do I want more money and I have to pay it back, or do I want free money that I don't have to repay, but I don't get as much.
How would a prospective home buyer learn about these type of programs?
Yeah, I mean, it's sitting down and having the conversation, and a lot of times people, they want to find the house first. They want to go out and they want to find the house, and then they want to talk to me or the bank, the lender that they're comfortable with. And I think it's unfortunately a little backwards. I always say you guys have the fun job because you get to go out and show the house and sell the dream, right? And I have the necessary job that we're lending a lot of money to do that, but. I think that sitting down, especially as a first-time home buyer, I do a full 35, 45-minute consultation with the client. I want them to understand their numbers, forwards and backwards, because I think for them to understand what they qualify for allows them to know what their budget looks like so that they can go back to you and say, here's truly what I want. It's crazy how often I talk to somebody that's been shopping for a month with a different lender, and then they end up in my hand somehow, and they don't even know what their payment or their cash to close obligation looks like. And maybe they're looking at houses for 30 days at a price point that's considerably uncomfortable. And they're like, whoa, I had no idea. So I think having the conversation of what is your budget, what is your payment and out-of-pocket investment, upfront investment opportunity, making sure that we're comfortable on that respect allows them to go back and be super confident with you, so that when you're out searching and shopping for a home, they're ready. They're eager to pull the trigger if they find the right house, rather than having a little bit of cold feet. Like, I'm not really positive what's going to happen next. But also, what incentives can I qualify for? What might I be able to do? We have incentives for home buyers that you don't have to be a first-time home buyer. Depending on the income limits and the location of the house we're offering. I just closed a loan last month and gave a non-first-time home buyer $1,250, grant money that she got to use towards her down payment and closing costs. And she, it was just icing on the cake. She was super happy about it. It didn't make or break, but it's just a nice incentive.
Mm-hmm. If let's say we qualify for a FHA loan, then what happens next to take advantage of MSHDA? Is that on the loan officer?
Yes.
Okay.
Yep. And really good question. So MSHDA is an extra step. So traditionally, we pre-approve a buyer. They go out. Their agent helps them negotiate a contract with the seller to buy. Once we have contract, now we have an address and a closing date. We can make full application to the mortgage company. We'll validate, verify income, assets, credit, their application. That'll go through underwriting. We'll order an appraisal. Now, once we have done our loan process on our end, now the loan has to go to MSHDA, and they have to offer their commitment. So we do our job as a full job, and then it has to go to MSHDA. They have to offer their commitment, and then now we have MSHDA's commitment. We now have the ability to fund the loan on our end. So there is that extra step, and the unfortunate news is MSHDA's the last step. So this loan's going to go all the way through, and the last person that gets to touch it is MSHDA. Once they offer their commitment, we'll fund the loan with that MSHDA $10,000. And that's where, as long as the loan officer's competent with the MSHDA product and knows those nuances, you're not going to have any issues. So any time that I have gray area or something that I think might be an issue, I want to take it to MSHDA immediately. I want to take it to an underwriter and have them review income. We're talking projected income gets squirrely, right? Because you're talking someone's perception of what could be overtime, bonus, additional income, and how they're going to calculate that out over 12 months. It can get, and you're talking the potential of being $1,000 above or below that income limit. It's not a decision I want to make, and it's not my decision to make, I should say. It's MSHDA's decision, so we want to make sure that they're reviewing those things up front.
Yeah.
So as an agent, I'm working with my prospective home buyer. I'm showing them houses. We write an offer. Should I count a few extra days or a week or any additional time if I know it's going to be a MSHDA loan? We need to allow to go through the regular underwriting, appraisal, inspection process. Do you need a lot of additional time for MSHDA?
Another great question. So I would say it depends on the client and it depends on the time of year. Right now, MSHDA's at 24 hours.
Okay, that sounds great.
MSHDA's at 10 days sometimes.
Oh.
And we're talking the loan goes through our process like I just explained, and then it goes and sits on someone's desk at the state of Michigan for 10 days before they're able to get to that file. So it's just sitting there.
But Greg, if you have a file at MSHDA, you just call the governor and say, hey, get on it, right?
No rushes. There's no rushes on that, and I promise you that that's not a solution. So unfortunately, the nature of the beast is like, if we're in a position where having the conversation with the loan officer to say, hey, we're going to write this offer. It's a competitive, we're in a very competitive situation. There's 2 or 3 other offers, and we want to make sure that we can be as competitive as possible. I can probably close a MSHDA loan in 30 days because we do so many and we're familiar with the process.
Right.
So for me, it would be probably no problem so long as the borrower's on board to be quick with the pieces that they need to control. But if it's at 10 days, if MSHDA's at 10 days, I'm probably not going to be able to close it in 30 days if 10 of it has to sit at the desk of MSHDA underwriter. So I would say that's probably a conversation that you'd want to have with the loan officer to have a better perspective of how long that process is going to take.
What I'm hearing you say, Greg, is this is just another reason why you should have those conversations up front with your loan officer.
Yeah.
Let's get that strategy planned out and make that part of our process as we're going about touring homes, selecting the home, and getting an accepted offer.
Yeah.
Get that conversation up front.
Yeah, and I think sometimes the buyer and the agent alike think that, hey, I'm not going to bother the lender with this, when really it's let's work as a team. Let's all work together to make sure that we have everything accounted for, everybody's within the loop, so that we can work together to get it closed rather than pushing it on someone else's plate, which I don't think a lot of people do that. I think that more or less they're trying to be, respectful of someone's time when really it's like, hey, I want to be a part of the process. I want to help you.
It's part of the process, and it's all about, setting and, managing those expectations
100%.
throughout the entire process. That's one thing that both the agent and the loan officer have that same goal.
Agree.
Well, that's one thing I've learned because I'm doing marketing, not real estate agent or anything here. Is since I do marketing, I like to give information out to people.
Sure.
But I've just from being around it, I've learned how, like you said, squirrely everything is, and how much it really if I was buying a house tomorrow, I would go and talk to someone and just have an in-person conversation if possible, because it's so complex.
Yeah.
And everybody has different qualifying factors and numbers and everything. It's like there's almost never any short answers to things.
I like the word you use there, complex. It's not complicated. There's just a lot of little details, and when it all adds up, it does become complex. No one thing is overly complicated, and that's where dealing with people like Greg or a professional agent can kind of help you guide you through the process.
Mm-hmm.
Yeah. The problem too is you just have people that aren't willing to go ask the right questions, and when you're dealing with something that is, again, you already have a complicated puzzle, right? I think lending is fitting the right pieces together, and I look at it almost like a puzzle when you have credit, income, assets, the property. Yeah. You're fitting puzzle pieces together, and now when you have MSHDA, it's just a bigger puzzle. So now you have more pieces, and it's maybe something that you don't do a ton. It's not an everyday loan product. I do a lot of it, so I can tell you, but I still run into scenarios, and I think that having the consideration for someone else's, time and their efforts, like I'm gonna go ask those questions, and I'm never gonna be in this long enough where I'll tell you that I know everything 100%. And if I need to go ask the person that gets to make that determination if this is right or wrong, I would rather have that conversation 10 times out of 10 than tell you matter-of-factly that something's true and accurate and then it not be correct.
For sure. And even like in the cases I said there's no short answers, I'm going to correct that. There are answers like, what's the lowest credit score that I can still qualify for this for? Then there is a number, but then that also takes other things into account. Correct. So it's not the whole answer. And
it's not, I have a 640 credit score, I qualify for MSHDA.
Right.
So now there's debt to income ratio. There's still an asset requirement. Sometimes there's a reserve requirement. Maybe you have enough assets to qualify, but they want to see money in the bank because credit history and your debt to income ratio, and all of the factors are considered when we're running these things through. So,
Do you find, like, when you sit down and talk with someone, there's a lot of things like MSHDA or whatever else, like benefits they could get that they have zero clue about?
yeah, or they buy a house, they only had one conversation, and they, and sometimes, unfortunately, there is no incentives. Like you don't qualify for any incentives through our bank, and unfortunately, that's a common thing, unfortunately. But they talked with one bank, they didn't explore, and within the environment we're in these days, I would rather spend 30 to 45 minutes with someone today, tomorrow, and have them, maybe they're looking at an opportunity to buy next week, maybe they're looking at an opportunity to buy next year. I think sitting down and having the perspective conversation of what does my roadmap look like, and sitting down with someone that's willing to spend some time working on their budget, talking about their credit, talking about their income and assets, and just having them understand the full process as a whole. Like, I enjoy that. And I just think that there's a lot of loan officers that, I don't want to say that they're not willing to do that work. It's just they don't have the time. They don't have the ability to spend that time, and they're just looking to get on to the next application. And I would rather sit down and spend time with people, and I understand that this is, it's something that I didn't have when I went into this. And I look back, and I ended up in a good opportunity to help people with that. So it's just one of those things that I take.
Yeah, that's good.
I like
that's
a lot.
Cool.
Yeah.
Well, I appreciate your time and thorough answers. Great.
Yeah, it was great being here. I love, like I said, I love talking about these things, and I think, again, it just makes me think of the opportunities that I've created using this loan product with people that probably wouldn't have been able to buy a house otherwise. So it's just something that excites me for sure.
Thank you.
Yeah.